Everyone talks a lot about big cap tech, and with good reason. The FANG names, along with Microsoft and Apple, have accounted for 38% of the S&P 500's gains since the low in February through August 8th. But they're not the only companies making money in this market. Cintas, a uniform supplier and renter, is hitting an all-time high this week, 35 years after their IPO. We've got Cintas Chairman and CEO Scott Farmer with us now. Scott, welcome to the show. Congratulations on your anniversary.
Thank you very much. It's great to be here.
You know, a long time ago, and I'm sure even today, Cintas was looked at sort of a barometer of the U.S. economy because you do provide uniforms, a bulk of your business providing uniforms to other companies. So what are you seeing right now?
Well, the economy obviously is in very good shape. The job market is very strong. I think that one of the things when I talk to business people that I hear most is that they're having trouble finding people to fill the jobs that they have. And you know, that's good news for all of us, but you know, we obviously benefit from that because we need people out there to wear those uniforms and use the other supplies and services that we provide while we're out there too. But it's been good.
From where do you source most of your uniforms?
Oh, we source all over the globe, really, so it depends on, you know, the different types of items that they are, you know, quotas, tariffs, things like that that we deal with in different parts of the world. But we source globally.
So you led me to my question, which is really why I was interested in that. Is are you experiencing, or do you expect to experience, any sort of supply dislocation or cost increases as a result of tariffs on imported uniforms?
Well, I'd say it this way. So far, it hasn't affected us very much. We're monitoring where it's going to go from here. My concern more than how it's going to affect our supply chain, because wearables and garments and things like that aren't real high on a lot of the lists for tariffs, is how it might impact certain industry segments that are our customer base and what will happen with our customer base. We're monitoring it very closely, but at this point, we have not seen a big impact on our company.
Stock is up a lot. I mean, wow, take a look at this. Since the lows, more than 1,000%. It's had a great year. How do you grow from here? Do you have to wait for the economy to get even stronger? Do you need the global economy to grow stronger, or are you trying to take market share from competitors?
Well, the really, really good news about our business is that you know, we provide products and services that we think every business needs. In fact, it's hard to think of a business or an industry that doesn't need one or more of the products or services that we have. We do business today with about 1 million business customers across the United States and Canada. And the way we look at it, there's some 16 to 18 million more businesses out there that don't currently use our products and services that we can go after, and we're targeting that group. And that, in my opinion, is the great growth opportunity that we have as I look out into the future.
What about TV anchors? Have you thought about that?
I'm sorry?
What about TV anchors?
Yeah, sure. Yeah,
we can sell us some. We can wear nice little,
you know, matching
mustard-colored blazers.
With your names embroidered on it, I think that would be helpful.
Scott, I was interested to see that. I believe it was it your father or your grandfather who founded the company, and I wonder, as is the case in Comcast, the parent company of this network, it was a family business in some ways, and you now are running it as either, I guess, a second-generation CEO of the company. How does that affect you in terms of the responsibility you feel to the business, if at all?
Well, it does. Historically, my great-grandparents started a small laundry business in Cincinnati, Ohio. At one point, my grandfather was involved in the business. My dad came up with a new concept, really a uniform rental concept, started a business, eventually bought the family business, merged it together. So my dad's really our founder. But it is. I'm in this laundry business. I'm a fourth-generation family member, and you know, to me, it's sort of the roots of the family. The core. We feel a responsibility to our employee partners, to our customers, and to our shareholders. And so it obviously impacts us. I think what it does, though, is it puts us in a situation where the culture that we've built in this company over a lot of years and starting as a family business remains in the company. And I think that's one of the strengths that the company has, is that a lot of people like and enjoy working in this type of a culture. And I think that's one of the great benefits of family-owned or family-founded businesses, when family is still involved.
Is there another generation of farmers?
There is. I have. They're very young. I have two nephews that are in the business. They're in their early 20s. My son is in the business as well. He's in his early 20s. One's a sales manager. Two of them are now sales reps. They've been through our management training program, but they started at the bottom and will work their way up. And who knows how far they'll go.
Fantastic. Tell me about the regulatory environment now compared to when the business was started. Would it have been as easy? Could it be done today compared to when your dad did it?
Oh, that's a tough question. I would say that it's a completely different regulatory environment. Would it have been as easy? I don't think it would have been as easy. Could it be done? It would take a lot of hard work, a lot of effort, a lot of breaks. But we are where we are right now. And I do think that today, as a public company, we have a great opportunity to access capital and do the things that we need to do to continue to grow the business as I look out into the future.